I will very much do something like this. Buy this in mind while I'm looking at 7 or 8 other coins, while I'm looking at coin 1, 2, 3. That's a really bad 3. 3 and 4. And maybe this is coin 0. So we're going to put a 0 here. So because it's the one we're going to go like this, a 0 like that. So this is coin 0. I enter this here. I decide that I want to sell my Valley right here. I do take that trade, and I'm out of the trade to go do the same cycle, and maybe coin 2 is ready. With that in mind, I'm still looking back at the level to be held right here, which is the more of a global level, right? I'm looking to enter this once 2 completes. Maybe I lose a % in 2 because my main intent here in Ren is to, my system is very much a hybrid system. My main intent is to get these larger moves in these coins. But when you have the sell, you don't just sit in it and wait for the coin to pull back. You take other trades while you're waiting during this pullback. So then I enter something else as a scalp position. So maybe I entered number 2 here as a scalp position, and I entered number 2 in the same spot. Well, number 2 might fire all the way and I sell, and by the time that sell is done and I've executed trade number 2, I have set up coin number 0 back to turn this back into a scalp or a hold position. And you have to kind of have these multiple positions in between. So you have to decide what is the right thing to do for you, whether you just want to scalp it, swing it, position trade it. That becomes dictated by experience. I think position trades are smart when they make sense. I think position trades, I don't like a lot of position trades. I'm very against position trades, but when they make sense, like I'm in GTO as a position trade right now, when they make sense for larger reasons, then you have to justify it and do that. And then maybe I enter here and sold here and then executed coin number 4 and I missed this move, but maybe coin number 4 made me half of what this did anyways. But the point being is that I'm juggling between different scalp positions and not getting tied to one coin. Because no matter what coin I'm taking here, whether it's 0, 1, 2, 3, 4, I guess we could just say 1, 2, 3, 4, 5. That would be much more conducive than saying 0, right? So we have number 5 here, right? No matter which coin you're in, again, they all start as scalps. You have to start every single trade as scalp and make your decision from there, right? And that's the Valley there. That's for breakout, right? You have the origin level created there. You have the breakout point. You have the back attack of this Valley up here. It's all very straightforward. It's just, again, identifying best entry, having a bunch of different coins you like. And people see me do this before on stream. You have a bunch of different coins you like GTO, metal, this, that. You pick the one that you best feel suited to be in, and you try to sequence in between these moves where this is a scalp and it leads to this coin because this executes as a scalp, which gives you entry on 5, but maybe 1 looks better than 5 at that moment. So you just X your 5 at a 1% loss or a 1% gain to get back into number 1, which is in this moment here. And then you have a large move up. Now, whether you decided to hold or not is up to you, but you kind of have to have this. In my opinion, this is where scalping makes sense. It's not like you scalp a coin. You scalp the market. You scalp the theory. You don't scalp coins. And that's something I'd emphasize largely, is that you try to sequence all these moves because everything is moving at all different time frames, and you can see something moves 10% and then it kind of just sits at 8% for 3 days. So it goes up 10%, pulls back 2%, holds this range. Where's a good example of that? Where are we on the 1 hour here? Holds this range. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 hours it held this range, right? So really the right buy is like back in 13 hours. But if you thought it was going to go to here and you held here and it comes back down before it moves up again and you sold here, I think it's a missed opportunity, right? Because you don't scalp coins, you scalp the market by sequencing the right amount of moves that go up. So you have to have kind of this overall look on all the market, because this becomes very easy. Like okay, what's another good moving coin? GoChain, I guess. No, maybe not GoChain, because that just moved. What's like another? Theta moves good. Let's just delete what we have on Theta. It's not really important for this right now. Okay, so we're starting here around June 26th. There it is right there. There's a hold level here on June 26th. Like, this is very straightforward. buy the hold, and then it moves up. Like this is one level, and you've made how much money, right? Potentially to this valley here, and you made 30% because this is the value you were going to sell it, right? So, I mean, you can do this on almost every coin where you just say, well, here's a hold level, buy the hold level, and it will, fractally this will move up, right? So you have these holds, and there's probably even better opportunities to buy in here, right? So when you look at this, you buy this hold here, it moved up there. So fine, it moves up here, you buy the next hold down, which is right here, which is even lower. This valley hold back here, it hits the hold level, rips up after, right? So you could just simply go and mark hold levels and identify good positions all day long. This is not a test of saying, okay, let's just go and mark all the hold levels and just buy every hold level. Like in theory, if you could sequence them in such a way that you could hit every single hold level in the industry, prior to the big moves up. Like, look, here's a hold level here, hit on theta, it hits its hold level, and then what is this, a 1 hour chart? Within 22 to 22, within one day, you just made 40% if you max leveraged. Which I'm a big fan of max leveraging. It's just that you have to sequence them right. So, with that in mind, it doesn't become about picking a coin, falling in love with it, and scalping that coin. It doesn't matter if it's waves. It doesn't matter if it's theta. It doesn't matter if it's Raven or Ren. That all is so irrelevant. It's not even funny. It's just about finding the right moves in the market and almost like scalping the theory, right? Almost like you're just looking to scalp the theory. Whatever coin is most likely to break out that's hitting its hold level and sequencing between this coin to that coin to that coin, because then you're scalping theory and not coins, which in my opinion is the right way to do it. It's much smarter than just falling in love with a coin like Ren. Although Ren is high volume, so Ren is actually quite a good coin to do this on because of the amount of volume and because of how often it moves. But then you miss the big moves, like the big 100% or 200% pops on things like BQX or metal, right? Then you miss these bigger moves because you're so in love with one coin. Like it really doesn't matter. You just identify all the positions in the market that have the right motivation behind them to move up, and then you sequence between coins, which really in the end of it is just all you've done is you've taken the concept of scalping and you've applied it to theory, right? Instead of sequencing between buy order here, a sell order here, and then you wait. It's these blank areas, right? These blank areas that you don't want to be in, right? Like what we're in with GTO right now, it's these blank areas we don't want to be in, right? You identify the hold, you hit the sell level. You're not sitting here watching Ren like a hawk and just doing this. Like this has a long time. You have so many other trades you could take in this space, but it doesn't mean you can't come back to Ren and buy this exact level again. It just means do it in the right way that you can sequence into being into something like theta, because possibly theta moved up in this spot. So now all you've done is you've identified coins across the market. Again, all you've done is use this same thing to scalp the market abroad, and instead of trying to find the one coin and playing it to perfection. Like you can have all sorts of other stuff you're trading in these downtimes, right? The bigger the hold, the more likely it will hold. You have to realize that buying these big hold levels is why we look at Ren and we just simply go to something like the daily chart and look for the hold back on the daily chart, right? Which is this level back here. Or you look at these larger time frames and you say, where's the big holds? Like I'm never going and breaking my charts down to say, oh, here's an hourly hold. Let's make sure we buy on this hourly hold. The hourly candle's just not strong enough. But a 4-hour hold is quite a level. It's a strong level. A daily is even bigger. A weekly is even bigger, right? So these hold levels are dictated based on their succession. It is largely based on fractal nature. Their fragility is based on fractal relevance, right? So I am in love with the 4-hour hold levels while doing scalping. Again, if you can identify the strongest hold levels, they will give you perfect entry on the best scalps, right? People wait and wait and wait to get entry there. All these people who sold at the top are just waiting to get entry at 717 here, and then they do, and then they look how much money they make, right? Quite the move. That's quite the move to the level, 41%, right? Over 4, 8, 12, 16, 20 hours, 40%. Like same thing on theta, right? Like it's such a crazy good buying opportunity. That's why people do it, right? Like look at the perfection of the origin level versus the hold level. And these are like legacy levels, right? So you have kind of this legacy hold down here and a large origin level here. And look at the perfection to how close you can get your TA on this. And let's actually go and see how close the TA was and how much percentage it actually meant. on like a large leverage move. Well, the leverage doesn't matter. It's the same percentage, but I'm just saying like I would have large leveraged this. And you can take off all the stuff in between here. And you can just take off this. This was already executed back in the past. This was already there. This is already done. And you simply say you have the legacy origin for this move or the local origin in this move and the legacy level. And you came within, what's the candle low here? 603 and our level was 603. So you came within 5 sats on the bottom, which is at this time less than 1%. And you sold at, well, we'll go to the candle high, 943 and our level was 939. So you got the top by 4 sats, you got the bottom by 5 sats, so you missed 9 sats in a how many sat move? From 608 to 939. So that's 331 sats. You missed 9 sats out of a possible 331. So out of 331, you got 323, 22, and made 54%. This kind of looks like the original valley that was failed. You have one right there, pretty important one. And then you have what looks to be like one right here. I'd actually like to see this on the 4 hour. Yeah, I'd like to see this on the 4 hour. Without seeing the front of the chart, I just kind of want to see. You have one right there. You have this right here. You have that right there as well. Then you have, oh, that's a huge one right here. This starts the move. This comes off of right here. Come on. There we go. That's right there. Yeah, that's the big daddy right there. That's the big one. That's what starts it all. Something like that. So then you get over top of here, you confirm, you test that, you fail it, you back test trend, you hold trend, you hold trend, you lose trend, you hold this level. And then you have your big breakout. You break over top of trend, that magical moment when sometimes it happens where we talk about this, where you have trend and you break over top of trend and you back test, confirm it, and then there she goes. Hits the origin level here. Back test confirms over top. Those are the big breakout points in this coin. Those are your ranges. Those are your big break points on this. And then it would have been moved to here. Your big break points. Right there, breaks up, back confirms, tests up, rides it up, tests this, back confirms, tries to hold it, breaks it down, tests it back up. It gives you a very good barometer to the entirety of Ren's history. Again, another point where it's trying to use that origin level to break over the top, right? It actually broke right over top of it. And these origin levels, like they will create levels in the future. So like typically like you can mark an origin level like this and kind of hold it for a long time and it'll have respect for reasons like this, because it creates these points, these lows or these highs. Like it creates the breakout here, back here, creates the back test valley right here. So that's like a back test valley. So it has to hold this valley, right, over a fractal period of time. So when it holds that valley, it creates, like this is creating levels in the future. So it's not that we just keep origin levels and have a million levels on our chart, because it's just realizing that this is creating the same level in the future, because that's a point where it was breaking out, right? Like it's a point like this, that side versus this side, right? Like it's a point like that where it just creates this duality between the top and bottom. But it's not that this is the level. This is just creating the same level in the future. It's just recreating it. Like you could adapt this forward. This level here becomes this valley right here, which also becomes this valley right here, which gives you the trend in the future, which trend follows here, back tests the level that brought trend there. So you see, it's kind of like it's just adapting itself. That's why origin levels are so powerful, because you see the truth behind all the levels. You see like truth behind it all. So, but then it just moves forward, right? Which this creates something else in the future, and it just keeps going and going and going and going. It's just a constant point that creates something like here, right? Creates this in the future, which would be just this. Well, shoot, where was that? Right there. Yep. See, right here, it creates this, which just becomes the support there, right? So it just creates this duality. It is all very much a science. Like you could just go like this: 1, 2, 3, 4. Like we can just strip this down to the most basic form. Every one of these, every time it touched backwards, you made money. Like it's just a very simple formula. It's a very simple formula. And until it breaks this here, which then gives you this right here, until this is broken, then you can just continuously buy these as you move up, and you can continuously sell the top side of these. Like you would just do this and draw the other side of your chart, and right, you can just simply do this until like you can buy hold levels, right? Hold level here, moves above it, rebuy. Moves above it. You could have rebought it a second time if you were super greedy. You could just rebuy this one next time. You could just rebuy this one next time. Maybe we could rebuy this on Ren. That's what we should be looking at. Ren is actually going to create a long-term trend here, which is this, which is actually going to create this right here. We should look for it to come back down to here. And when it comes back down to here, we can just all make 50% on Ren. Easy money. But you have to see it, right? Like, you have to see it. You have to actually be aware of them, because this is happening on every coin on all time frames. This is happening, right? So you just have to do your best to see it, right? So if it actually comes down, so we actually tested that one. So we wouldn't be buying here, rather we would be now buying here, which would be your next one. Perfection, right? Which I guess now you would look to buy the hold of this low right here, but this is still making moves down. So this is still moving down. I don't know if Ren is going to move down. I think actually at this point it would be quite possible that it would be laddering up. Identifying perfect entry doesn't always mean, like I said earlier, it doesn't always mean buying the all-time lows or the craziest swings that you can find to have the craziest dip down to craziest swing up, because you miss too many trades like that. It's about identifying the thing that makes the most sense. And you guys see how I did it here. It's about identifying things that makes the most sense in the current time frame, because at one of these levels, people are going to be rebuying in a big way. It's either going to be this origin or possibly this origin here. This untested right here down at 603 could quite possibly be this. This level was going to get hit. On the hourly, I would actually go and I would see if there's some kind of 4-hour level anywhere. There's not. Yeah, this has got to be it. You can see it clear as day here. This has got to be it. That was a huge breakout moment, which leaves the top of this candle, which would leave the base of this candle on a 15-minute. Should be about accurate. 15-minute base is right there. Right here, which is this level here, which is tested and held, which is the back. You see how it back tests more of the backside of the valley in a move up. It's going to back test the backside of the valley. When it's falling, it's going to more test these right here. So if it's falling, it's going to test. But anyways, that's fine. We'll test either. But you have the valley here. You can see how it held that valley. So then I would just simply go back to the hourly to say, okay, well, where's the current local one of those? What's going to be where I can enter perfectly without getting scathed here? I could actually enter on that level. It's the same level, right? This is the same level as it was here. Getting entry right here would have been the same thing as getting entry here. It comes down, it tests, it says, okay, am I going to go up or down? And then whether you held, what you did with that coin at that point is up to you. But identifying perfect entry opens your options to all the different things that could possibly be in the coin, right? Theory trumps TA. But it's a very advanced form of theory, because it's not theory in a very liquid, broad statement, right? It's not just, oh, the theory is this. No, there's TA, and like I explained earlier in this video, there's TA that will be superseded in the future by theoreticals. But the theoreticals will design the TA. The theoreticals design the TA for the future, and the TA follows the theoreticals. So it's kind of like this. We went back to GTO, and we're going to go there again. And we looked at GTO and we talked about like, oh, it could, short here. If the big money wants to sell this level, then they know they can get out with their profits this level at 202. Or we actually looked at this on a much bigger time sense. We looked at, okay, well, where's the weekly level up here at 400, right? And then, we were doing this on a weekly chart. That's why it looks not the same. You look at this and you say, well, the TA is showing you that 458 is going to be the level. Well, if too many people know 458 is a level, then theoretically, The inverses will be scalp. If the inverse is not enough of a profit, but the bigger account people know that 458 is a target, then they will sell something in between the hit, like a hidden level in here somewhere, which might dictate the movements of the future of what is going to be respected by TA, because a TA follows the theory and the theory dictates the TA, right? So it's kind of this co-relationship that they have together. You always see it evolving when you look at enough charts. You always see things slightly changing. Sometimes it's always the inverse. This is why I want to do a meta report so bad, because sometimes it's always the inverses that are getting hit for a very specific reason. Sometimes it's always the dailies that are getting hit. Sometimes you have big pump syndrome where everything is moving up. The meta in charting is always changing because these are decisions based on people. Kind of, if people remember watching me trade QLC, and I exited for a very specific reason on QLC, maybe people will understand that more now. I was in QLC and I exited for maybe an 8% profit. When I said it was going to break out, I said my account size is too big to be in this move. The failure is the risk of failure is too high. In order for me to get rid of 2.5 Bitcoin of QLC or whatever I had of QLC, in order for me to get rid of 2.5 Bitcoin of QLC, I have to find exit properly, which is kind of like pre-failure part of a move. If you can't sell this red level and it just won't go there and you have that much to sell, but this is big account holders making decisions, right? And like 2.5 Bitcoin on something like QLC is decent. It's not a big account hold like 10 Bitcoin, but it's enough to make an impact, right? It's like kind of the reason why I exited QLC is because there's a certain point where you have so much invested into a coin, you have to find proper exit. You have to get out somewhere in profit. In order to get out in profit, you have to see whether failure is there or not. It's how it is everywhere. It's targets being taken by larger accounts, right? So it's how it is everywhere. It's very much the same thing. You go deeper into theory and it redefines the technicals. Theory is always based on human beings' choices, because if the technicals become too accurate by too many people, then we just start using different levels. And if those levels just aren't good enough, then we start pumping back to the original stuff. If this was the hidden level that TA got so far into and went so far down the rabbit hole that this was the hidden level, then you have guys breaking this on purpose. People sold here. The real sell was up here because this was like the proper inverse off of this, right? Like right there, something like that was hit, this first one here. And then it resets the cycle. Then when the TA is too sharpened, right? And there's times in the market when this happens, when it's too sharpened, and this was a level that everybody was selling, it actually moved up to here, and everybody who thought they were ahead of the game missed the bigger move because the move was actually brought all the way up here. And then, all the money was shorted out of the market here, but the move was actually up to here. So it's a cycle, right? It's like once was old is now new. It's the same thing with like design or recycling, or it's the same theory. It's the way our human minds work, right? It's the same thing. So there's always a shift in these things. As things go forward in the development for all you guys, understand that theory, but not in a traditional sense of theory, like, oh, let's just theoretically say this. No, the theory of the advanced technicals does have a dictation on the market. The theory is less important in understanding the technicals. The theory is more important in making money. That's how I would define it. The theory doesn't necessarily make you change your technicals. What the theory does is it allows you to make more money. But it's not that kind of theory. It's the theory of what's happening. It's almost like theory is the wrong word and the meta would be the right word. And that's why I wanted, again, using that keywords like the esports words of meta report. It's really smart because it will show people like what's happening in the markets in the current space. This is actually kind of a perfect coin to do this on. And I wonder, there's another hold in here that got hit. We're just going to see if fractally this did get tested. I don't think it makes that much of a difference here. Really, we're looking at this level here to hold over time. And that didn't get tested. Really, again, the correct buy is here on this trend at 4,000 sats. So what are we looking at on EOS then? So we've kind of found this is like a perfect example because we kind of found this area where it looks like it's a great buy. What do we do from there? Well, we want to first start by looking at what the possible breakouts look like on it. The origin is very clear, very clearly right here between these two candles here. So this looks like it was the hourly downtrend test and then retest failure to go against it. So it looks like it is going testing back a 4-hour level. Attack a daily here, and you have a couple levels here, right? So we're going to start color coordinating this properly. You have the daily level here, which is going to be a solid line, and we'll make it thinner here like this. And so you have a daily level there. You have a daily up here. What is this? 5,200 sats. I think that's reasonable. You have the inverse right there. What do you have for the weekly? Let's just look at this weekly a bit. You have the back test of this 45. Yikes. EOS chart is not looking too good, is it? Oh boy. You have this inverse here. So I guess this is the top of EOS's range right here. This right here. Yikes. This does not look good, does it? Which is also a monthly there. So we're gonna mark these two out. We're gonna actually mark all these three out as possibilities here on EOS. We're gonna go white for monthly here. This was a weekly, which is purple, and then we're going to come and pull back to the weekly, which that weekly should be actually right here. Weekly, monthly, monthly. These need to be dotted, dashed like this, inverse. EOS is not going to have a good time on the way up, but it is what it is. And we have a weekly here. So you start breaking down these targets, and this is how you start your scalp, right? This is how you start your scalp. You start by breaking down all the targets, and you say, okay, well, what do the targets look like? Where are we at in the coin? We see EOS right now. We've assessed that it's hit a pretty insanely good buy level. What is this, down to 1,000 sats? We've hit this December 2017 low on EOS. It looks like it's holding for the past 2 weeks. It's going to have to fight trend right now, and trend simply adapts to here. We had this here, which was trend. And then we go to the daily. We see if there's anything to adapt on the daily, right? There's nothing to adapt on the daily. We simply have the collapse of the level. We can leave it on the weekly. That's fine. It's more relevant on the weekly. There was no hard close here. We are not looking to adapt this further. We could adapt it to this candle close right here, but we're not going to leave it where it is because that's showing a larger time frame break. With that said, we can now see the global trend right here, which global was actually going to be found on the daily, right? Global here on the daily to accumulation. That does close over right here on this candle, and then this closes over right here on this candle. So we did actually just break trend. So this is about in the same spot that GTO and every other coin is in that hasn't moved yet. It's about to have a breakout, right? It's just how big is this breakout going to be? Well, with EOS, it's not that big of a move. It's just a trend back from me. Nevertheless, it has a pretty sizable move up it could take. So we can start to ascertain what are we going to do with this coin. Well, we have trend compression all the way up here. So we can reach all the way. So let's talk about trend first, identify trend. So trend dictates that we can reach all the way, and maybe we're going to say, we stop out at this level. So we can actually hit these upper range of levels. We can actually hit this inverse here on EOS prior to hitting trend over the course of this next. Most likely EOS, we can already say EOS is probably going to take a move up to 63.30, right? So we already know there's no real compression on this. The downtrend is too sharp. It's too far out. Therefore, there is no trend compression, which just becomes a back testing of levels. So there is a bit of a long game here on EOS, which is not bad. The long game is nice. Can it be a 200 or 300% move? No, probably not. Can it hit trend? Yes, it absolutely can. Possibly it can even adapt this to the 4-hour trend and even broaden out some more to almost this monthly inverse here at 7K. So you can adapt that in this situation because of that. Because there's no real trend adaptation, trend compression, I would adapt it because you're not breaking trend anyways here. So there's no point to keeping it laser accurate. Rather, you want to, instead of keeping it laser accurate like this, which is the breakout point, you want to see what it could possibly reach up to and not a float breakout, right? It's different if you have trend like this, you want the accuracy here to see the exact float breakout. Just like in GTO on the weekly, you want the exact float breakout point. Rather on EOS, you want to see kind of the top of its range. So we can already dictate that this is going to kind of be the ending ground right here between these two levels. For that reason, we take 6330 because 6330 is simply just the best of the range. You're not going to not take 6330 because you tried to get 66. If you miss another 7%, so be it. And then you miss 7%. But in my opinion, I would take this weekly inverse here. That's me. Now we can start to look at what do we want out of this coin. So if we are starting to set up a scalp position, what do we want? Well, we first want to fractally identify the trend, right? So this is going to be trend. You can even just go to the hourly and find it here. This here to that guy there. Distribution candle right there. You could do it to this. Fractally, it looks like it's right there. You can go to a 15-minute. You're going to see the distribution candle is actually the last one happens here, which fractally is that one right there. That's why you see it follow that, which you could even say that it has closed this one right here. So that's actually the real trend fractally.